gathering on the traditional land of the Coast Salish people. I'm going to provide an overview of the Section 95 program, including how subsidy for the program is calculated, and then I'll go over the financial statement call letter package that we sent out, as well as some of the other areas that we look at when we look at financial statement reviews. So the on-reserve nonprofit Section 95 program, which is commonly known as Section 95, assists First Nations in the construction, purchase, rehabilitation, and administration of suitable, adequate, and affordable rental housing. In order to be eligible, projects must be located on reserve lands and be modest in design. To help offset costs, CMHC provides a monthly subsidy. The legal contract for the program is an operating agreement that is signed by the First Nation and CMHC when the project is committed. So our obligation to start providing subsidy starts at the interest adjustment date, which is when the loan payments begin, and continues until the loan is paid in full. So typically the amortization is 25 years. A requirement of the program is that First Nations submit audited financial statements within 4 months of the fiscal year end. This would be the same deadline as both ISC and the First Nations Health Authority. And the financial statements are one of the tools that CMHC uses to assess both compliance with the operating agreement, as well as assess the viabilities of the homes that are built under the program. So this is an example of Schedule B, which forms a part of the operating agreement. This provides information on the number of homes within each particular project, the minimum revenue requirement, the estimated operating costs, as well as the estimated subsidy that will be provided. I'm now going to go over just an example of how subsidy is calculated. So subsidy is calculated based on the annual principal and interest payments, plus the operating costs benchmarks, minus the minimum revenue contribution. What happens when you're short? You change the height of the mic. So in this example, the annual P&I payments is $6,000 with annual operating cost benchmarks of $4,000 and a MRC of $5,000. So based on this, the annual subsidy would be $5,000. So while P&I payments will vary based on each loan renewal, the minimum revenue contribution and operating cost benchmarks won't change for the life of the project. So in April or May, depending on timing, CMHC will send out a call letter package to clients reminding them that financial statements are due. In this package, we'll include information on the phases that were under administration for that fiscal year, a report showing the amount of subsidy that was owed and provided, the replacement reserve allocation, and for projects under the post-1996 program, we'll include information on the minimum revenue contribution for that project. If a project was only under administration for a portion of the year, for example, if a new project reached IAD or if a project operating agreement expired throughout the fiscal year, we'll include information that's prorated. This information is typically sent to housing managers. If other individuals within the organization need a copy, this can be provided. However, in order for us to provide information directly to your auditor, we would need authorization from you to do so. And I think this is what ISC also said, so it's similar requirements. When it comes to audits, typically the only time we will send it back is if the balance sheet isn't signed. And this is just an example of the data sheet that would be provided with the financial statement call letter. So you'll note it includes the replacement reserve allocation in the third column, as well as the MRCs for the post program. So when it comes to financial statement reviews, for CMHC, we'll look at a few things. So one, for the post-1996 program, we'll make sure that the MRC has been contributed to the program. And for the pre-1997 program, we'll be looking to see that it is breaking even. For the replacement reserve, we look to see that the funds are used for capital expenses and that the required funds are held in a separate interest-bearing account. And for the operating surplus or the operating reserve fund, we look to make sure that the required funds are also held in a separate interest-bearing account. In addition to reviewing the financial statements for those particular things, we look at the expenses being charged, so specifically repairs and repairs and maintenance expenses, as well as the balance sheet. So this is done so that we can assess both the compliance with the operating agreement, but also assess the viability of the projects as a whole. So in the operating agreement is a standard list of replacement reserve items. These are eligible items, so if the replacement reserve funds are being used to cover expenses such as these, then no approval is required from CMHC. They can just be charged to the program. The auditor just needs to confirm that the expenses are capital in nature. If there's something outside of this list, you just need to be in touch with CMHC, and then we can review that. So CMHC has available additional resources that can be provided to assist in the preparation of financial statements. One of those is the Here's Help with Your Financial Statements document. We're in the process of updating this, and we're hoping to have a new update available for April. So if I can give one piece of advice, it's that if you do have questions, to reach out to a member of CMHC. We have a general mailbox for the agreements management team, and this is the team that would be responsible for reviewing any of the homes that are currently under agreement. So thanks again.
Thank you, Rashika. Thank you, Rashika. I personally don't think there's anything wrong with being short, so that's quite all right. Our last presenter this afternoon is Anton from CMHC. So Anton, we will test you to see if you get all of these questions answered as well. Thank you.
So, up or down, you could use the clicker.
Okay. Can you hear me okay? Okay. Good afternoon, everyone. My name is Anton Kiriliuk, and I'm one of the managers with Funding Arrangements FNHA team. My team works with your health directors and band managers to assist with managing health funding agreements. I want to before I begin, I want to acknowledge the territory we're on, and I'm happy to share this information with you. So this is a quick overview of today's presentation. I'm going to quickly talk about our funding types, what we offer through our health funding agreements, what are the funding flexibilities that come with those agreements, what FNHA's financial reporting requirements, timelines for submission, review and response to communities on those reports, update on the reporting transformation that FNHA is currently undergoing, and there's some frequently asked questions that will make Paul happy. So funding model overview. So FNHA funding agreements have three funding models. It's set, flexible, and block. A recipient agreement can accommodate a combination of any of these funding models. And this feature allows agreements to be structured to accommodate different capacity and delivery of the programs on the ground. And it provides built-in flexibility to move funding based on the funding modality. And the funding models vary, so all these three funding models have slight differences, and the difference could be in the type of health plan that's required, the extent of involvement of FNHA in managing the program, flexibility to move funding within the agreement and from agreements to another agreement, the ability to use surplus or carry forward or spend funds, the duration. There's a difference in financial and activity reporting requirements and evaluation requirements as well. So this is our health funding model activity structure, and you guys have a demo on your desk as well. So let's dive in a little bit in each and one of them. So for example, any of the programs, and again, I'm speaking in general terms, there might be some exceptions to some programs, but generally, any of the programs can be either set, flexible, and block. So, for example, if your program is set, the funding needs to be used in accordance with the funding agreement. However, should there be need for the recipient to use funding in other programs, you have that ability and you can move the funding within the same functional area group. So for example, I don't think it's showing. Okay, so for example, if you have any of the funding under Healthy Child Development Program, so for example, if you have a Head Start funding, then you have a flexibility to move funding within that block, Healthy Child Development. If you have a program funding for mental wellness, any of the mental wellness programs, you can move that funding within that mental wellness column. Now, when it comes to surplus and carry forward, as of recent, recipients are now able to carry forward said surpluses for one more additional year with the approval of FNHA. So now let's look at the flexible funding model. Again, the funding for this for flexible programs need to be used in accordance with the funding agreement. However, recipients have an ability to move that funding around as well. Flexible opens up a little more flexibility for communities to move funding. So right now, you're not restricted within the mental wellness or healthy child development or environmental health programs. Right now, you can move the funding within the entire, in this case, primary health care group on the left side, and on the right, you can move funding within health infrastructure support. You cannot jump from one to another, but it definitely opens up possibilities for you where you can use the funding. In terms of surpluses, so right now the recipients are able to carry forward surpluses for the duration of the entire agreement. And there is also a possibility for communities to roll over the surplus into the new renewal agreement. And now look at block. So when we're dealing with block is the least restrictive funding model. And in this case, recipients can reallocate funds among any of the programs. Again, there are a few exceptions, but those can be discussed one-on-one when you guys working with our funding advisors. The surplus may be retained for reinvestment in accordance with the community's health plan for future years. So this was kind of a quick overview of the funding flexibility that our FNHA funding agreements offer. So as I mentioned before, right now, SETA funding can be carried forward for future years with the submission of SRP. There is a separate process for health benefits and joint project board. There are possibilities to carry forward that funding, but again, please reach out to your funding advisors and they will be able to answer your question in detail because it requires a little bit different process for that. Flexible and block funding surpluses can be carried forward automatically from year to year and can be forwarded into renewal agreement. So why are we asking what's the purpose of the surplus reinvestment plan? It's more of a communication tool for communities to communicate their emerging needs and priorities. And that's what we use to kind of assess surplus requests for set funding. Now, in terms of FNHA financial reporting requirements, what we require is audited consolidated financial statements with FNHA's revenue and expenditures as a separate schedules. So basically what we want to determine, we want to connect program expenditures with program revenue with expenditures and how funding was used under the agreement. So in this case, set, flex, and block funding must be presented separately. If you have any set funding, we would like, one of the recommendations we want to make is to present it in the similar format as your program schedule, so we could trace what was the funding for any given program and match the expenditures to that. In terms of flexible and block, you have an ability to roll it up and report it at much higher levels. So for example, you can report back at as a kind of a healthy child development schedule or mental wellness schedule or home and community care schedule that provides kind of a revenue and expenditures for multiple programs that fall within that bucket. In terms of timelines, so it's the same deadline, July 29th. So for this fiscal year, what we would require for funding agreements is consolidated audited financial statements, revenue and expense schedules for health programs, and if you have a set funding, set agreement only, we do not require audit generally, and we just require your year-end financial report. And we do have a kind of a central repository for all the reports, so that's email address that you can use to submit all the reports to FNHA. Now, in terms of review and response to communities, FNHA provides agreement holders with an annual financial reconciliation letter to support communities with financial analysis, planning, and investment. Once we do our review, a reconciliation letter is sent out to all funding recipients. The letter would typically contain summary of surpluses, any deficits, amounts approved or allowed for carry forward, or any recoverable amounts. Now, in terms of transformation, FNHA is kind of growing organization and transforming organizations, so we are constantly trying to improve our funding agreements, our relationship with our communities, and what information we ask of communities. So this is definitely a huge, an important agenda, item on our agenda. So we will continue to improve and continue to transform funding arrangements and the reporting requirements. Any updates that will be done to any of the reporting, we'll definitely communicate them with you. And again, if you have any questions about your funding agreement or requirements under that agreement or how to navigate this, you can always reach out to myself or our funding advisors. And I have one with me today. It's Tina Manson. She's providing support on for a few regions. Now, this is some of the frequently asked questions and some recommendations. So what are some common gaps and mistakes that we see? So sometimes we only would get audited financial statements, but we will not receive any revenue and expense health schedules for health programs. Sometimes we will see programs that are grouped together that need to be reported separately. So at the end of the day, what are we looking for in the audit? We just basically what we want to reconcile FNHA provided funding against eligible expenditures. And some recommendations. So accurate for us and for your auditors, accurately record financial transaction and prepare all required financial reports and statements described in your health funding agreement. Another recommendation is ensure that coding of expenditures is accurate and applied appropriately to program listed in the program funding. So if you have multiple programs and you do have ability, as I mentioned before, to move that funding around, but it will be helpful if your reports or your schedules will demonstrate if that funding was moved, how it was moved from where. So we can clearly identify this is what happened, this is how funding was flown through community and which services were delivered. And you can, as I said, our funding advisors are here for you. This is our job to work with your communities, with your health directors, with your band managers, with your finance folks, to help you navigate that agreement and make the best use of it. And in terms of questions, this is my contact information. The other manager that you guys probably all familiar with is Michael Rupisan. He's responsible for community arrangement side. So he's working much more closely with communities than I am. And I'm a manager of the partnership arrangements. My portfolio consists of nonprofit organizations, treatment centers, IRS service providers, and different special project initiatives, such as Joint Project Board, for example. Some of your communities may have that as well. And again, this is Tina's information, and we have funding advisors assigned to each region. So again, you can always reach out and we'll be happy to assist. Thank you very much.
Excellent. Thank you, Anton. Thank you to all three of our speakers here today. I have a couple of questions, actually, and I apologize if I missed these answers, but Rashika, what is the deadline for reporting for CMHC? Is it also July 29th?
Yes.
Yes, thank you. So now, Anton, you covered this quite well, I thought, with what the FNHA, how they respond to the audit. I know your answer, but can I ask, how does CMHC reply back to the agency, to the organization, about the success or the issues outstanding from the audit?
So I think similar, just that on, no, sorry, thanks. I think similar to both ISC and the First Nations Health Authority, there would be a letter that goes back to clients to just say, one, acknowledging the receipt of the letter, outlining any compliance issues that may exist, as well as any concerns that we might have with viability.
Good, thank you. Now, Anthony, that's a little different with ISC, is it not? You provide back financial adjustments, do you not?
Yeah, so at the end of our audit, we'll provide you with a cover letter, and then there's like a written report which highlights where we think your financial position is. It will highlight any recoveries, reimbursements, any deferred revenues that we're carrying forward. And also attached to that, you'll see all the adjustments that we've made with the relevant notation as well.
Perfect. Excellent, thank you. So we do want to make you aware that in early December, we will be sending out all 3 presentations, as well as an updated audit, as well as an updated, what's this referred to again? Thank you, the audit session report. Also, as you know, we have a door prize. You have to be here at the end to be eligible for the door prize. It's quite a nice door prize, so I recommend that you stay. But now we will proceed with the breakout sessions. And since you're kind of all alone, do you want to join the group in the middle maybe? And what we'll do is these 3 tables, maybe we'll start with Anthony from ISC. And these 2 tables here, we'll start with Anton from FNHA, and these 2 tables here, we'll start with Rashika. And we'll maybe do 10 or 15 minutes. I'll give a 2-minute warning, and then we will rotate. Okay? Thank you. Oh, and thank you. Our video recipients today, we are all done with you. Thank you for joining us, and have a wonderful day. Thanks. Yeah, just over here. If people...